Hello once again, this is Dave Knight here at Knight Capital Management. We're looking at the Contact Us page. I want to go over a lot more details on our TCB crude oil product, our taking care of business in the crude oil market. So I got 15 minutes to get through all this, so let's not delay, let's get moving. First thing I want to show is proof of where we started and where we are right now as I'm videoing this on February 18th. Now we're getting ready to we're getting ready to have our next pre-launch here for the early bird, and our next class is coming out in May of 2011. So a little bit of lead time here. We're about midway, February's almost over, March, April, and then bam, May, we're starting up a new class. So let's go ahead and take a look at the first thing I want to take a look here is our Google Documents, our shared file here. I've taken some liberty to take some important details of my own account and so forth out of there, but leaving the statement intact as far as the trade. Now, as far as the trades go, on the 3rd of January 2011, I just want to note we didn't actually start trading until January the 11th, I believe, is the day we first started. So 5,066, that was the number that you saw on January 3rd. Here's January 10th, 2011. Notice it's at 5,066. This is the day before we start here. So we actually start trading in the month of January for our new year here in the room for January 11th. Now January 11th was our first real action in the room. We end up with a closing in at 5,260. Notice that we're up $200 on this trading day. That's 20 ticks. 20 times 10 is 200. We have a $6 commission cost. This is one trade here on the day, and we end up with a $194 gain, and we end up at 5,260. Now we're going to go over through our trading log as well, but I want to go through the statements here with you. 5,504 here on the 12th of January. The 17th. On the 17th, no action here, 5,504. The 19th, now we were being really conservative in the month of January because we were just getting started, getting used to the market. Just being very, very conservative on our strategy here in the month of January. So $54 win, 60 bucks less 6, 54, 5,558. The 24th of January. Notice that we start the week at 5,558. Same as the last statement. Now let's look at the 26th. On the 26th, $194 win. Now notice we're only trading one contract. We start at 5,066, and until I get to the next level, I have to stay at 1. So 5,752. Notice another 20 tick win, $200. Finished at 5,752. The 27th of January. We end at 5,946, and I believe that is our ending date here. Let's look at the 31st because I believe that's what we ended up with. Yeah, 5,946 on January 31st, and if we look at our monthly statement from Transact, notice that we end up 880. We end up at 5,946. We take some profits in the February contract of 450. We take 460 out of March. We have 5 trades total in the month of January. Just basically taking it easy, getting ready to start our class here. So when we got ready to start February, one of the things that was opposed to me is I want to see you, start and have a losing streak and then get it going and whatnot. So we decided the first 2 days of February to conduct a little experiment and lose some money. So on the 1st of February, we end up losing $550 on 3 trades, 3 losses in a row, 568. Now this is not the way that we trade this strategy. I was just showing how I wouldn't say stupid, how people that aren't trading properly or not trading a system. This was just taking trades at a whim on these 2 days. So We take another 4 trades on February 2nd. So I want you to notice that we go down $850 plus our commission costs of $874. Now the goal was to get down below the 5,000 mark and actually have, I guess in this case, our first downturn or first valley. So we have our first valley. I actually pressed the market here so that I can come down below the 5,000 mark and then prove that you can take this strategy and build it up again. So we start the month of January at almost the $6,000 mark, and then I end up turning around almost $1,500, $1,400 and something down at 4,504 before we start getting moving. Now the fun part starts. Now we start trading the strategy again here the way it's supposed to be, and we end up with 2 trades this day, $628 win, and we end up getting our money going back here to 5,132. Now this is the 3rd of February here. On the 4th of February, this is Employment Friday, the first Friday of February, we end up with another $264 win, and we finish that week at 5,396. Notice this is the 4th of February. The 7th of February. This is a Monday. We don't normally trade Mondays in the room, so 5,396. Here's the 8th. Just a slight gain here at 39.50. Notice we had 3 trades, and we ended up with a little bit of a net loss here at 250, and then we end up taking out some 312 underneath, and we end up with $39.50. 3 trades altogether. 2.8. There we go. 2.8. On 2.9. $284 win, 5,719 and a half. Look, we've already almost made up all the money that we lost, and it's only what the 9th of February right now. So just a week after we went kaput, we turned around and now we're closing in. Now look at this, 5,943 up $214. 220, that's 22 ticks times 10 is 220, less our $6 commission cost, $214, 5,933.50. I believe we have a 11th, no action on the 11th. I don't believe, yeah, we did. Oh yes, we lose $118 on 3 trades here. This is, I believe, the Egypt eruption or whatnot. I can't remember exactly what happened. So anyway, we end up with $5,815.50 on 3 trades. So we make up some of our loss here along the way, and we only get down 100 ticks here, and we finish at 5,815.50 on 211. 214. Got to hurry up because I'm running close to time. 5,815.50, no changes. Here's the 15th. 15th, $138. We come to 5,953.50. Now this is actually a new high this day. It's only, I think it's high by $7.70, but it is a new peak high. You'll see that on our chart here in just a minute. On the 16th, $6,075.50, up $122, 140 less. 3 trades here, so that's 18 bucks out, 122. 6,075.50. That's where we are right now on the 18th. The 17th here, no action into option expiration on the 17th and 18th. We're starting the 22nd with the holiday. We're starting 22nd of February at 6,075.50. Here's February 17th, 2011. So let's take a look at the chart. Let's take a look at our trading log here. Take a look at the actual trading log. This is the chart. Let's look at the trades. 29 trades since we opened up the room again this year, starting January 11th to February 16th is our last trade. And we've had our 7 losers in a row here, which is going to take the statistics off. We take away the 7, we are above the 60%, 65%. But I just want to show that you can have even 7 losses in a row and turn this trading strategy around. 55.17% winning percentage because of the this will obviously improve. 29 trades, 16 wins, 13 losses, just barely at break even here. 1,950 up off of our original 5,066. We gross profit 3,497.50. Our gross loss 2,488. We have a profit factor of 1.41. Now this will be considerably higher if we knock out that 7-trade losing streak just to prove a point here. Now looking at our graph here. Here's our graph. This is all trading one contract. Here's our biggest wins coming in here and here. Here's our graph, our money graph here, right? So we come up here, we have a peak in January. This is our 2 days losses, February 1st, February 2nd. Here is our up streak here. I mean, it's not straight up, right? It kind of piddles around, and then we finally end up right above the 1,000 mark here, 1,000, whatever that was, $1,009.50. So we're up 1,950 off of 5,066 at this point. Now, looking back at the optimum trading strategy, 126 trades. Now this is going back, taking on 5 contracts. This is the end of last year, going from August to November, right before Thanksgiving here. 126 trades during our time frame here. This was our class prior to this. Our statistics, 61.11%, 126 trades, 77 wins, 49 losses. Starting with 5 contracts, our net profit here is $66,584, a 2.32 profit factor. That's pretty much where it is, above the 2 mark. And reward of 332.92%. Now our graph is, let me explain this. This is the 5, so 5 contracts. You got to look at this side here. You might want to pause the video here. I'm running out of time, so I'm moving as quick as I can here. And this is the graph of our equity graph. The blue line through here is the equity graph that we did, and we started with 5 and worked our way all the way up to the 9th contract and when we were trading in November. So see, over $65,000 in less than 4 months. Pretty cool stuff. So you can see that once you start escalating your contracts from 1 to 2 to 3 to 5 to 10 and so forth, how much money and how profitable the trading strategy continues to be. It's designed to take on at least 10 contracts and more. Now, we look over at the one more thing I want to look here is long-term plan modified. We do have our plan to go to $2 million here and looking to do it within 10 years here. So start with $5,000 and working our way here. You can pause it and look at this. Here's a delta factor. This is a really special spreadsheet. It's proprietary information and so forth that we want to share with you in our TCB crude oil product and our early bird list. Get in the early bird, learn about this trading strategy, learn how to make some money. Now, this is February 16th, and I've already took the liberty of replaying this day. I wanted to take a look at this particular. This was a bounce off the 200 bar MA on the 16th of February, and we're able to catch this sucker going all the way up. And I want to show you the power of this particular trading strategy on just one day. Now, if you're trading 5 contracts, just this move alone, $2,260. 10 contracts, $4,520. 20 contracts, $9,040. Our entry point was $87.41 on the current contract. Now, I know this is the April contract. You got to adjust back to March. I wanted to use the continuous contracts here in Genesis, but so it translates out to $87.41 here. How much am I doing time? I'm trying to beat the 15-minute mark. Our ticks, oh, by the way, this day, our ADR was at 2.12. That translates out to 21 ticks. So we believe in a concept from Van Tharp called R. R means risk, and risk to us, and we define that. We define the risk. We define what our R means. So in this case, 21 ticks. We have a 21 tick hard stop loss. Now we can move that, but 1R target, 2R target, 3R target, and we have our 100 tick target for our rabbit as well. So 100 ticks in this market is $1,000. So it's 100 times 10 gets you $1,000. It is an awesome market to trade. The crude oil market. It's a very liquid market. It's a very fun market to trade. And we look forward to getting you on the early bird list. We're getting ready to take 10 new traders coming into May. Get in the early bird list. Last time we got real close to selling out. This time I'm positive I will sell it out off my early bird list. This is Dave Knight here at Knight Capital Management. I appreciate your time. I know how to push this in 15 minutes for the YouTube, but I appreciate if there's any questions I might be able to answer, feel free to send me an email or give me a call and leave me a message. I'll be more than happy to talk to you. Dave Knight, Knight Capital Management. Take care, everyone. Bye now.